Reserve Bank's decision to hold rates at its latest meeting was risky, as tight monetary policy could lead to recession. That's according to Investec Wealth and Investment Chief Investment Strategist Chris Holdsworth. At the Monetary Policy Committee's July meeting, the MPC justified its decision to stand pat by saying that it still needs to stabilize inflation at its 4.5% target, and risks to that are still to the upside. But it's widely expected that a rate cut of 25 basis points will be made at the next MPC meeting in September, and this could herald the beginning of the monetary easing cycle. TotalEnergies has confirmed that it will walk away from gas discoveries off the south coast of South Africa. This comes after the French energy major faced difficulties in the country, including several legal challenges from environmentalists. Speculation is that the firm has made the move so that it can divert most of its investment to Namibia, which has embraced gas and oil exploration. Sasol says its appeal related to sulphur dioxide emissions from its Secunda steam plant has been successful. This paves the way for emissions generated from the site to be regulated on an alternative emission load base from April next year. Panic gripped the Energy and Chemicals Group in 2023 when the National Air Quality Officer rejected its request to have SO2 emissions from its Secunda boiler plant measured differently. This would have put the petrochemical giant at risk of violating the country's air quality laws and facing legal consequences. Pan-African Resources gold production has kicked up a notch. For the full year, the miner has posted a 6.2% increase in output of the yellow metal. This is in line with guidance, but at the lower end. That's as a delay in commissioning the ventilation shaft for hoisting at Evander 8 underground operations adversely affected production in the last 2 months of the reporting period. Alongside the group's operational update, Pan-African also announced that its financial director, Dion Lowe, will retire at the end of September. He will continue as a consultant. Marlene Koch will succeed Lowe. South 32 sale of Illawarra metallurgical coal is now unconditional. Thus, after all conditions precedent to the deal have been satisfied, the miner will receive up to 1.65 billion Australian dollars from the disposal. The transaction supports its strategy to simplify and reduce capital intensity. South 32 CEO Graham Kerr added that the sale is a significant milestone in the transformation of the group's portfolio towards commodities critical to a low-carbon future. And Owando says neither the company nor its executives own shares, investments or interests in Maltese company Ras Hanzir Oil Terminal. This comes as the Nigerian energy company responds to recent allegations on social and digital media. Claims have been leveled at the firm that it's a shareholder in the Maltese firm and that Owanda's principals are board members at the company. Ras Hanzir Oil Terminal operates oil storage and a blending facility, but has allegedly been involved in importing tainted petroleum products into Nigeria. The claims that the two firms are connected prompted Owando to conduct an investigation. And following this, the JSE-listed firm has stated that the allegations are false. Further afield, Dutch brewer Heineken reported a 12.5% rise in half-year operating profit after an anticipated boost from sporting events in June and July did not materialize, missing analyst estimates and sending its shares tumbling. Here's more detail in this package report.
Few investors liked the taste of Heineken on Monday. They were put off as the Dutch brewer's results missed analyst estimates for the first half of the year. The firm reported a 12.5% rise in operating profit, less than expected. It blamed poor weather in June and July and said it didn't see a hoped-for boost from sporting events. Company executives argued the firm's first-half performance was solid and raised profit guidance for this year. Heineken now expects to deliver organic operating profit growth of between 4 and 8%. Investors were eager for the company to update its guidance. They were disappointed earlier this year by a wide-ranging outlook for growth, which drew criticism for being overly cautious. The world's second-largest brewer, which makes brands like Tiger and Sol, also faced a $948 million impairment charge related to partner China Resources beer.
And fears of a Donald Trump presidential victory are prompting European clean energy firms to reassess their strategies, with some suspending expansion plans and expecting lower sales. Let's check in with our reporter Ndawleng Lechela for more.
That's right, Zinati. Europe's clean tech companies are bracing for the hits their sector could take if former U.S. President Donald Trump is re-elected. Now, with less than 100 days to go to the U.S. presidential elections, boardrooms across the continent are wondering what a new term could mean for that industry. And joining me with further insight is DW correspondent Cassandra Sant. Thanks for your time today. Now let's get straight into it. Where do concerns in the clean tech sector stem from?
Thanks for having me. Well, these concerns stem from the so-called Trump effect. The former president has dismissed the current president's efforts to fight climate change as quote-unquote the Green New Scam. He's expected to try to undo much of Biden's work on the matter if elected. He's also a big proponent of fossil fuels. Earlier this month at the Republican National Convention, his message was literally drill baby drill, a throwback to the 2008 election. That line was related to Trump's desire to make the United States quote-unquote energy dominant, even though the U.S. is already the #1 producer of oil in the world, pumping out more than 2 billion more barrels per year than the next biggest player, Saudi Arabia. And what we're seeing is that European companies, specifically those that focus on clean energy, are abandoning expansion plans in the U.S. They're also bracing for lower sales or the possibility that funding for U.S. projects would be in doubt.
Specifically, former President Trump has put a target on a law called the IRA. What is that?
We're talking here about the Inflation Reduction Act, which was passed in 2022. It offers tax breaks and subsidies to U.S. and foreign companies that invested in sustainable energy, and it has spurred other economies like the European Union, for example, to boost their support of greener industries too, in order to stay competitive and not lose business to the U.S. But when we're talking about the concerns that these companies have, they're really rooted in the bottom line. For example, there's this Luxembourg-based hydrogen firm H2 Apex that is on the record as changing plans and now pulling out from a planned hydrogen tank production plant in the U.S., which they could have built under the IRA for a third of the cost, which was estimated at about $15 million. Now, savings on that much overhead is massive for any company, but especially for these technologies just trying to get off the ground. But the company canceled plans over concerns that Trump could be reelected, despite the fact that the company has already held initial talks with potential customers.
And what other companies are holding back on investing?
Well, a German solar firm called SMA Solar issued a profit warning last month, citing a possible government change in the U.S. Hydrogen firm ThyssenKrupp Nucera has spoken of delays to final investment decisions concerning U.S. projects, and several others have reported delays as prospective partners are expected to co-fund projects that those partners are holding off with some of their commitments. Though I should add that these concerns are not unanimous. German wind turbine maker Nordex, for example, said last month it would resume production at a shuttered plant in Iowa because the U.S. remains an important and sufficiently big market in the future. But stepping back, one analysis that I saw estimates that a Trump presidency could put a projected $1 trillion in low-carbon energy investments at risk by 2050.
Let's leave it there. Thanks for those insights. That was Cassandra Sant from Deutsche Welle. It's back to Zinati now with your markets update.